Hello and welcome, as today is that of the 22nd day of December. It is a Saturday, and welcome to the Crypto Day Morning. All trades, bets, and of the like within one's own each risk and their own reward. Within the Bitcoin chart crossed against the US dollar, starting off with the Bitstamp exchange. Price action yesterday having a little bit of a decline, down 5.7%. After it managed to make a run from 31 change up to close to 42, now down to about 38 and 1/3. Price action for the first time since the decline got above the 18 average on December the 18th. That has remained such thus far ever since, and therefore because of that the 18 is now starting to rise. So if it's going to come down further, and it doesn't need much now, it's going to enter its correctionary phase, or if it just goes sideways for a short amount of time, thus continuing to correct through time, then it would do the same thing as well. So therefore, reversal of trend, stage 1, band, flatten out. That was a 1-day event only. Stage 2, establish resistance. Thus far, it's right here. For if price action, say for today, were to rally, maybe go up to 43.50, 44, then I would count that as the newly established area, and still looking for its correctionary move thereafter that. So that is how I'm looking at the Bitcoin. Obviously, in the bear market, there's no guarantee. In fact, I don't even know what the probability odds would be, and they wouldn't be anywhere near magnificent of a pass on this correctionary move. And thus, the bear market, it could very easily make new legs lower. It could continue to just go sideways and work its way through time. But it obviously could be the bottom. And yeah, I don't know which of the answers it's going to be, but rather manage risk amongst all levels of market movement. One of the things I'm going to be looking for is the volume. For volume is usually a key indicator or a key point of showing key tops and bottoms. Now, obviously, this volume has been sustained a lot higher than it was before the fall, going back into what it was like in October and September. But we were on microscopic volume back then, so that was to be expected. If we look at this on a weekly term time frame, we can see that this volume is pretty much matching the consistent volume. But overall, as I look at such, it wouldn't be a surprise if this thing does one of two things, because it's got to do either or. It's either got to get going up, or it's got to have a leg lower. Either way, coming in on decent sized volume could very much indicate a possibility that we are at or near the levels for the key lows. Key Fibonacci I've talked about many times before. High 20,000 and the low of 150. 6,000, low 6,000 was 23.6% down on an exponential level. Markets move exponentially, not linearly, so a lot of the ways Fibonacci is calculated by most people is done linearly, Linear. And the 3,100 area represents a 38.2% down correction. It pierced a little bit above that level, and below that a 61.8% level is a pierce below 1,000. And towards, and that's a big down area. But as I look at this from market movements, point A low, point B high, all that type of stuff, and it's so obvious to tell where the key lows and highs happen to be. So a price point down to 1,000 would technically be a higher low from the last key one. And as far as markets go, when you're in an uptrend bull market, low, high, low, high. If it's low here or low here, well, high would be above this resistance. Now let's switch over to the Coinbase exchange. We'll take a look at the quick volume there as well. So we'll use the weekly chart for such. And you see this heavier volume in here. Again, this price maybe goes down, maybe hits the first low Fibonacci level I got at 26, or even further than that. Then just maybe at that point we might do it on heavier volume. I'd like to see it actually come up to or surpass the volume from the high which took place. And either or, it could have a move where this thing might rally in 1 or 2 weeks, have a decent sized green candle of some level, and the volume gets higher than this, and probably even higher than it was at that point there. Seeing that type of volume coming in the market would tell me that's a good chance what the bottom is in. 4-hour time frame, I put these Fibonacci lines in, so therefore the 4,100 mark most certainly a level of resistance. It has been correcting within the 18 average of lows, so you can say showing signs of weakness, and I kind of would have to tend to agree when looking at this on a shorter term time frame via the single hour chart, because this is a pattern that is most certainly bearish. So the test of the 3,700 does seem like it's a good favorite to me. Many opportunities in testing and breaking up this level at the 41. It had its first real good opportunity on this 11-hour timestamp, December the 20th. Obviously didn't do it and had a failed move lower, but it represented a very good bottom for that time because it rallied right back up to that level. Okay, another opportunity to take it out. And from point low here to where this high happened to be, there was, for correctionary moves, there was 2 before then. So, you know what? I'm not going to say there was no excuses that it could have taken it out there, but when you have green candle up, 2 sideways, another green candle up to previous high like this, then that really does state there's a good chance even the next 1 to 5 periods you're going to take it out. It didn't do it. It followed it through the red candle, and then a matching low pierce above the previous one, which then resisted the 18 average of highs on this occasion, and then it came back again for 3 periods of here, obviously showing the weakness on the lows for the leg lower. Since then it corrected through time, and then it had this break. But whenever I see a situation like this, this is relatively bearish. A sideways move like this, 1 green candle up, and a relatively quick instant move back to where it came from. This is 3 red candles down back to that point. Within the current one, this is a single hour time frame, 24 minutes and 20 seconds remaining, which tells me it's past the halfway point. The majority of the moves can oftentimes come in the not only the first half of the period, but really even the first third of the period. So in an hourly time frame, the first 20 minutes to 30 minutes usually is going to have a good chunk of the body that each green and red candle is going to present itself. So I'm looking at this situation as the possible very short term failed breakout fast move lower, and thus if I'm seeing weakness come down here around breaking 3,800 and the high 37s, I'm going to be confident moving forward that this thing is going to move down to that 3,700 mark and probably even pierce below to the high 3,600s at least. And then, because if you're doing what you're supposed to, and this just because I say this pattern is bearish, I think more times than not this is going to fail than succeed. Because on a succeeding situation, that means you find a support where you have to, and where you have to is easy. Where it came from, 18 average. So it is where it came from now. It is on the 18 average of lows. So it hasn't failed that test yet. And if it's going to pass, I'm going to need to see this get above the 18 average of highs. That is in the high 3,800 area. If I can see it hold and stay above roughly around 3,855, 3,860 even, for more than 3 or 4 hours, or having a nice break above this high, then I'm going to be very, very confident that this thing is going to have another move back up to this 4,100 area. So that's where it stands with Bitcoin. Let's move on to some alternate coins. We'll start off with then Litecoin crossed against Bitcoin, which after this beautiful up move that it had reaching previous resistance, piercing above. Yes, this technically was a higher high when I look at the number at 8,248, and this high was 8,145. Oh, that's technically higher, but no, it's a pierce above matching high. What has happened in the days since? A sideways day, then a good down day, which comes down to near the newly rising 18 average, which is what I needed to hold. I can go to the lows, that's fine. But I needed to hold this average, and the 18 cannot go lower if it wants to sustain the run. So it's been 3 days of just going sideways, not showing any signs here of breaking out, but holding and showing for 3 days. Oh, this is looking like strength amongst the 18 average of highs. Looking at so via the single hour time frame, well, this is giving me what's the word I'm looking for? Evidence. I was looking for a different word, but this is I'm seeing in here how these lows come in nicely. We had this resistance amongst here. 18 average starting to barely rise. Price action for the last 5 hours has stayed above that band with this very short-term level of resistance established. This more, well, still a short-term level of resistance, but not as short-term as this one. So therefore, this thing to me, when I look at this via the 4 hour, let me just remove the drawing tools on such. Getting it above here, whenever you have a situation of point A low, point B high, with what I call a successful good correction, because how did the 18 average of lows succeed on its test? It failed. Here's a big one right here. It comes up to this point, and no surprise, this has this leg lower, but that's it for the leg lower? Really? That's it? Because it's not much, but it is a leg lower. It's about as basic or as small to a minimum degree that I could count. But from point A low, if we're going to have point B high here, that's pretty good. Even here is good enough, because this is the general area I need to see this hold. So if it's only going to correct about 38-40% rather than over 60, then that's pretty good. 18 average band is flattening out. That's already done. So stage 1 is in play, and via the 1 hour time frame, if it's going to get going, then it's going to set up resistance established amongst this level. So if it resists established, it's going to be very important to keep this, to see how if it can go to stage 3 and 4. But if it doesn't even do the stage 3 come back to support, and this just keeps going in here to this high, then this is that spot I do not like as far as a trader, is you go straight up fast to a previous high like this, what's going to happen next? Because it could very easily soar so fast, or it could easily have a nice correction as well. But if I see that it's going up again, I'm going to be noticing that on the daily term, that we'll bring that chart back up, remove this add. Alrighty, daily term. If it does that, it would be looking, of course, to do what it needs to do, and that is go to stage 4, break established resistance here, because getting above this point in there, we can look at this on the weekly chart, and that means it would be looking to break out more longer term. And the next code will be Komodo. And as it stands, 1923 is the Binance price, 1916 is the TRX price. There is no arbitrage available, at least not now. So on the weekly time frame, band flatten out, that's stage 1, that's all we can say. It needs to break out to go to stage 2, establish resistance. I'd like to see that happen on the weekly term time frame at least around 23.45, but I'd be more happy to see it closer to 26. But on the daily term chart, what do we see in here? Well, I like this setup. Within this, we got these highs in here, pierced a few times. The correctionary move on the 18 has been spectacular. The day before this broke out on the 18, you had this point where it went to it, came back. That's really what people call a bearish candle. A cattail, I think, might be the name of it. But it's where you have a good rally and then you come back close, and you close pretty much near where you opened. But it followed through higher, and what did we do for the 2 days after, today included? It has just been maintaining its move going sideways on the single hour time frame. This is an ascending triangle. I'm not going to draw a straight line, but you can tell that that's an upward line, and we can tell that there's a straight horizontal line. I could put a ray in, but I don't need to. I see within the 18 average how it's been looking to get above this during this time frame as we speak. 15-minute after this very short-term level of resistance in here, it got above it here, but wasn't able to break out. But it was also holding its move via finding support at the 18, then holding and staying above the 18 here. It resisted it here, but this period it broke above it. There's the situation where it comes back down. This is what I call the bullish candle, like the opposite, where you go down like this and you close near the highs, but it hasn't went up since. Nothing much of a candle here, but this one coming back to where it came from. So this is a very key test. If it's able to correct within here and any of this newly rising 18 average that's maintaining these higher lows, next one from this 1888 mark, And yeah, this thing it wouldn't be a surprise if this thing gets going relatively soon because I like its pattern. Let's move on next to BNB, which is that of Binance Coin, and amongst its chart, the big 3-4 day rally going from the 125 handle up to the 170. And for a lot of coins, that's like not much, but given its little movements that it was having, decent sized rally. It's continued very good volatility ever since, because you look at the size of all of these green and red candles, the bodies of it from high to low compared to here, and it was getting pretty decent in here, but so small over in this area there. So we've maintained very good volatility. And within its move, this is what's very interesting about this. You have your 18 average of low support test. It went as far as it could on a textbook bullish level on its pullback. It pretty much came exactly to where it came from, but the 18 supported. And then it resists the 18, and then it comes back, and it's supporting mainly around the 18 average of closes now. Not shown, but you can pretty much give an indication it's in the middle somewhere. This is where it gets really interesting here, because this is your breakout point, but it never broke out. I mean, this red candle was fine because it already had a short-term leg higher, but that's where you would have expected it to not go down any further, and it did. But where did it go to? 18 average of lows, this higher low from here, lows and highs known after the fact. It's only been 2 days, but that fact is known that this is a low. So it's coming up close to this previous level of resistance from about 5 days ago. Breaking out above that, that's another opportunity that it tried in here. We'll see how it does at this point, but it would be a definite good chance of decent gains. But for now, all you'd be expecting is a move to the previous high near the 17,000 Satoshi level, or 170,000 Satoshi level. Let's look next at THETA token, up to 1413, but it was at 1700 earlier today, and it's even lower than I thought, which is okay with me because I got 2 buy orders or sell orders filled that I'm still trying to buy back, because not really, I guess it was up here before, but I sold twice up here. I wish I would have gotten the 17, and I need a shorter term time frame to really explain how it worked for me. Let's do it this way. Because what happened for me, and I mean, you don't get the greatest of results, but mathematically it's still going to be profitable. I ended up selling at about, where did I sell? 1300 even. I think it was somewhere around 1300. And then I noticed the market was up, and I noticed, oh, they told me sell order THETA, like 12.95 even. It was, I mean, price was down here at 12.50, so I got my sell order hit. And then I look and I see it's like 1500. It was up here. Okay, so let's sell at 1500. But this is where, if I wasn't around on the computer, I think I would have done better, because what happened was I removed all my orders, all my sell orders anyway, and then I sold again at 1500, put a new buy order in, and the buy order is still coming down to down in here, by the way. I mean, that both buy orders. I mean, this buy order is down here, and then the other one is pretty much barely below it here. It works out to it's actually 1250 is this buy order, so that's my lowest area. I don't think it's 1150, but it's a decent move nonetheless. That's what it comes down to. However, I sold this and I removed the orders, and I think I might have had a sell order near 1700, which sucks, because if I didn't see it, I would have had the 17 hit instead of the 15, which would have been so much nicer. I put my next sell order for 1900-ish, 18 high. Obviously it didn't hit. So now it's just a matter of waiting to either have this market go back higher so I can get that 19 hit, or go back and get this number in here, because the volatility obviously increased a little bit with this move. So as this stands on the single hour, there's a big move. It had this little wedgie pattern of higher lows and lower highs breaking to the downside, and so far is correcting amongst this 18 average of lows. So with any big break, always important to hold where you came from in the 18 average. And it's difficult to state where you came from because it was everywhere along the way. But generally, you look at this 1285 mark, resistance here, and the 18 average of low is very important. So even though in the single hour time frame it's had a decent pullback, and it's showing weakness amongst the 18 average of lows, for even with this move in here, whenever you come down to the 18 lows, like 4 red candles down as such, and then you have this period which shows that little bit of a rally, but it's pulled right back down, and then you got weakness amongst such, and there's only 9 minutes left in this single hour time frame as I'm doing this. So 15-minute term time frame, that's just that little bit of that correctionary move to the 18, which obviously got quickly rejected. Even this very short term move you could probably see on the 5 is being rejected as well. So it looks like it's going to continue to correct that move lower. Next up is STRAT, and highs and lows are known after the fact. Yes, this was a high here, but that's a lot of facts to go on December the 4th, and as is the case on December the 14th with this low. But this high of pulled on December the 19th at 34,000, that's not the high. You could have thought that day it was going to be. And then the day after that, which is December the 20th, the current high right now is 39,313, and that's why I say it that way, the current high right now. Because yesterday's session it had a nice red down day move, but this isn't much of a correction within this level. And if continued momentum goes higher, I'm not going to look at that as a high, even with a red candle the next day. And if this manages to make a move higher, then this run that it's going through is only going to extend itself. And let's look at areas where it could go further. Well, we've already came up to this previous level of 2017 October support. We've came back to the congestion area from the middle of June through the end of July. So next up, we got this support area here at around 52 from April, which goes up to this resistance area from the April Fool's rally. So the April Fool's range would be its next level of resistance. And as far as market reversal, stage 1, band flatten out. And I'm going to do it here first. Make sure I get yep. Stage 2, establish resistance. Stage 3, come back to the band. 18 average lows didn't succeed. Instead, it came down, went below it, and then for just even the bear market, establish support, come back to the band, break support. Leg lower occurs. So now we've had band flattened out, obviously. Resistance this is by no means, this is definitely high enough. By no means small, I should say. This definitely counts. So therefore, whenever it decides to come back, then I'm going to be doing all this thing. Now that doesn't mean you're going to get in on a good move, because this thing can go all the way up to here and beyond without even ever coming back to the 18. We could see 9, 10, 12 weeks go by, even less than that for that matter, and have something happen. And here's the perfect example right here. Oh, so band 1, band's flattened out. Okay, resistance is established. What's the high? Oh, here. No, that's not the high. Shorter term, it was a little bit. But this thing from March of last year goes from 76 handle all the way up to a lot higher. Let's move on next to Tron, and this will be the final one. This is well over 20 minutes, but there's a lot of stuff going on right now too. So, and I'm not one to decide. Yeah, if you want longer videos, this is a channel for you. So therefore, we got the support here multiple times hit on this longer term time frame, and on the weekly, we've seen this band flatten now. Just before this big period, 2 periods of just showing strength amongst here. But looking at this on the daily term, it really paints that very interesting picture, as the 18 average of support and this resistance basically from November 29th through December the 20th. I like how on December the 19th it had this move where it broke out above here, comes back, and then just skyrocketing to the upside from the 18. Today having a high volatile pause day, and it's pretty much had a bit of nice move from its close above, nice move from its low, but only nice compared to the volatility of yesterday or the day prior. 4-hour term time frame, that textbook market movement. Establish a level of resistance, come back to the 18, break established resistance, and like I've stated before, you could find resistance here, come back, and it could be a key top as well, But if it breaks, expect a fast move. Oh, a fast move occurs right to this level of resistance, comes back to the 18, comes and tests it, doesn't take it out, but is still managing this uptrend, and the 18, of course, is rising. And this is really the definition of trend. And when you see this, then that's an uptrend. And therefore, within its single hour time frame, that's uptrend. And then it shows strength amongst the 18 average of highs, but never breaks out. And then what happens, you have this red candle down and you establish this level of support. It didn't hold and stay below the lows, but it did change the trend. It made us neutral. And yes, this is rallying. So it's in the attempt to regain what has been bullish. As it makes this high in here, showing strength here, but overall what's happened amongst this is we've seen a market go from bullish to neutral. And you can see all of this. It's long enough now to know that until it can have a move below this low or a play above this high, it's going to remain in a neutral setting. Thank you for tuning in and have yourself a great day. Bye-bye.